Hi and Assalamualaikum. We are from Group 3. In this presentation, we will be presenting the problem scenario of financial management. The company that we chose are Padini and Bonia. So let's us introduce ourselves first. My name is Mahmudatul Amalina binti Nasruddin. My matrix number is 01 DPA30063F2007.
Hi, my name is Darshan Perempuan Kalak Chilbum and my metric number is 01DAT23F2023.
Hello, my name is Siti Zul Izati binti Zulkifli. My matrix number is 01DAT23F2006.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurfatin Shafina binti Abdullah and my metric number is 01DAT23F2002.
So let's go through with the introduction. Padini Holdings Berhad is a Malaysian fashion retailer established in 1971. It owns popular brands like Padini, Vinci, and Seed, offering affordable clothing, shoes, and accessories through its Padini concept store and brands outlet across Malaysia and several Asian countries. Next company is Bonia Corporation Berhad. Founded in the 1974, is a luxury fashion brand which is known for its leather goods, including handbags and footwear, offering over 1,200 outlets in Asia. In the Middle East, Bonia also managed international brands like Brown Buffalo. And then let's go through with the ratio analysis.
Per Lina said, we have picked two companies, Padini Holding Berhad and also Bonia Corporation Berhad. So I'm going to present about current ratio to you today. And for Padini, we have current asset and current liabilities. As you can see, current ratios formula is current asset over current liabilities. For Padini would be current asset 1,182,753 ringgit, and for current liabilities would be 269,768 ringgit. And we divide those two, current asset over current liabilities, we get 4.38 as per the ratio. And for Bonia, current asset 294,204 ringgit, and for current liabilities is 94,596 ringgit. So we take these two and we divide and we get 3.11 as ratio. And we can compare within Padini and Bonia, and we can see Padini has a higher current ratio compared to Bonia. That shows that Padini has a stronger position to cover their short-term liabilities with their current asset, and also it suggests Padini has a better liquidity and it's more conservative to approach the debt management. Next up, we have inventory turnover ratio, but before going into that, let me tell you that the value of cost of goods sale, inventories, current assets, and current liabilities are extracted from statement of position, financial position, and also statement of profit or loss. And let's go into it, where inventory turnover ratio, the formula is cost of goods sale over inventories, and for Padini, the value of cost of goods sale would be 1,223,743 ringgit, and for inventories, we have 288,212 ringgit, and we just divide the both values and we get the ratio as 4.25.
Next, we will see the ratio analysis for gross profit margins, where the formula is gross profit over sale and times with 100%. The gross profit for Padini Holdings Berhad is 695,104 over with the total sale amounted 1,918,847, and the gross profit margin for Padini Holdings Berhad is 36.23%. For Bonia Corporations Berhad, the gross profit is 251,499 over with the total sale amounted 413,665 times with 100, and we got the gross profit margin for Bonia Corporation Berhad, which is 60.8%. And this is the total asset turnover with the formula total asset turnover equals to sale divided by total assets. First is Padini Holding Berhad, amounted to sale with 1,918,847 divided by 1,800,029 and 239, and we got the answer is 1.05. The next one is for Bonia Corporation Berhad, sale amounted 413,665 divided with the total assets 714,513, and we got the amount with 0.58.
Return on asset. Okay, first, formula of return on asset is net income divide total asset times 100%. Okay, first for Bonia Corporation Berhad, net income is 39985 million, total asset 714513 million. So we divide and we times 100%, so we get 5.60%. Okay, for Padini Holding Berhad, net income is 146,682 million, total asset 1829239 million, and we divide, then we times 100%, which is we get 8.02%. Okay, efficiency in asset utilization, Padini's return on asset of 8.02% indicates a higher efficiency compared to Bonia, which is 5.60%. So in side of operational performance, the higher return on asset for Padini suggests stronger operational performance and profitability relative to its asset base. In contrast, Bonia lower return on asset may reflect challenge in asset utilization or profitability during the fiscal year. Debt ratio. Okay, the debt ratio, the formula is total liabilities divide total asset. So for Borneo Corporation Berhad, total liability is 231,223 million. So the total asset is 714,513 million. So we divide and we minus and we times 100%. So we get 32.36%. Okay, so for Padini Holdings Berhad, total liability is 718,129 million. Total asset is 1829239 million. And we divide and we times 100% and we get 39.25%. Okay, so Bonia Corporation Berhad debt ratio is 33.26%. Bonia finance approximately one-third of its asset through liability, indicating a conservative approach to leveraging. So for Padini, debt ratio is 39.25%. Padini utilized a higher proportion of debt in its capital structure compared to Bonia. So both companies maintain debt ratio below 50%, reflecting prudent financial management and a balanced approach to financing.
For the AR turnover ratio, the Padini's credit sales is 1,918,847. The trade debtors is 70,429. The AR turnover ratio formula is the credit sales divided with the trade debtors. Padini's AR turnover ratio is 27.25. Meanwhile, the Bonia's credit sales is 413,665. For the trade debtors is 56,285. So the Bonia's AR turnover ratio is 7.35. Padini's AR turnover ratio of 27.25 demonstrates a much higher efficiency in collecting receivables compared to Bonia's ratio of 7.35, highlighting Padini's quicker each conversion cycle. Padini is more efficient in converting credit sales into cash compared to Bonia. Next is the earning per share. Padini's earnings attributable to credit sales is 1,918,847. The number of ordinary shares in issue 69,563. The formula of earning per share EPS is earning attributable to credit sales divided with the number of ordinary shares in issue. Padini's earning per share EPS is 27.58. Meanwhile, the Bonia earning attributable to credit sales is 413,665. Number of ordinary shares in issue is 201,572. Bonia's earning per share EPS is 2.05. Padini's higher earning per share compared to Bonia may be due to several factors, such as stronger sales performance, better cost management, a larger market share, or a more efficient operation, of all which contribute to higher net profit distributable share.
And I'm back again to conclusion to ratio analysis, where on the comprehensive ratio analysis, it shows that Parini demonstrates a stronger overall financial and also operational performance compared to Bonia, and also it has a more attractive option for investors. So taking all ratios into account, it proves that Parini has the most stronger investment profile. So it's making it as a preferable choice for the investors seeking consistent returns and also well-managed financial performance.
So this is a statement of financial position and statement of profit or loss for Padini Holdings Berhad.
This is the statement of financial position, and this is the statement of profit or loss for Bonia Corporation Berhad.
And that is all from us. Thank you.